Welcome to readtheticker.com. Today we're going to talk about trading the pair, or pair trading. A very popular trade in the recent time has been going long Google and short Apple. Readtheticker.com ratio symbol is Google :Apple. For example, here we have a simple chart of the Google stock price, and here we have a simple chart of the Apple stock price. As you can see, I'll just make that a bit larger. Got a correlation from this low to that high, very good. And here we have a negative correlation where Google goes up and Apple goes down. So technically, for a pair trade, you like this action where you go long Google, and when you would go short Apple at a value equal in sum. For example, if you bought Google here at 640 and you went short Apple here at 540, you just take the equivalent amount of $10,000 for each, or $1,000 for each in dollar terms, and that's your pair trade. Down below here we have the ratio between Google and Apple. As you can see here, Google is stronger than Apple, so it rises. And here we have a correlation. And for a pair trade where you go long and short, you want to see the correlation deteriorate. This is where Google goes up and Apple goes down. So here's a rapid deterioration of the correlation. So that's a simple graphical display of a pair trade. But really, when you have lots of pair trades on 20, 30, 40, and you want to manage a relationship over a period of time, because pair trades are like stock prices, you want to get in them and get out of them when the timing is right. We can go to our work groups, my defaults, and set up our ratio symbols. For example, down here we have 12 pages of ratio symbols. It's 30 symbols per page. That's quite a lot of pair trades if you're a pair trade enthusiast. Where are we? Oh, here we are. I got my pair trade examples. I've loaded in Google to Apple ratio, gold to GDX. Now, gold to GDX was a trade recently made public by Hugh Henry, a successful hedge fund manager. We've got the biotechnologies versus staples. Here we've got IWM, which is the Russell 2000 ETF, and OEF, which is the S&P 100 ETF. And here we have utilities versus TBT. Now, recently the story has been people have been buying stocks as a bond offset for dividends. So XLU is very heavy on dividends, and TBT is obviously rising interest rates. So if a stock is paying greater dividend than the interest rates, you want to buy lots of stocks. But if the interest rates rise, you don't want to be buying stocks. And here's the XLP, another ratio which is based on the same dividend versus interest rate relationship. So that's how we load them. I've got a setup here of a scatter chart, which I'll show you later. But obviously you could load in 30 pair trades, you could load in 60 pair trades, load in 90 pair trades, and carefully watch them over the time as to trade them like a stock price. Just like the point is that a pair trade between Google and Apple is the same pair trade if it was between the Aussie dollar and the US dollar. It's pretty much exactly the same. Well, here are we. So here we go to our my alpha 12, which is, you see here, my alpha 12 pair trades. I'll click that. Ooh. Here we are loading. So first we get a chart showing the percentage change on the upper symbol. For example, here we have a change in Google, gold, biotechnology, Russell, XLU, XLP. It got broken down between day, week, 2 week, months, 6 months. Here we have our scatter diagram. What this shows is at the bottom we've got our alpha rank change. Now, as you know, a comparison between, for example, in Google and Apple, it's basically a relative strength comparison. So if one pair has a stronger relative strength over the other, it gets ranked higher. For example, here we have, this is the highest rank, previous ranked 4th, previously ranked 6th. So you can get an idea, if you're monitoring 30 pairs, and you want to keep an eye on relationships of pairs, and when one is down or when one is ranked strong against the other, you can keep an eye on the pairs in this table here. And here, for example, this one here tells me that because this chart has got the highest, I think what's this one? IBB is the strongest trend, and also the strongest alpha rank change. So what's IBB? Here we are, IBB down the first table. It's jumped up to number 1. That's why it's further to the right, and has the strongest trend based on the 200 simple moving average. This is our RTT trend power indicator on the lead symbol, showing that's the strongest trend, and IBB is just second. So it's just like a ranking situation. Now we get into the charts. Now this is the meat and potatoes of a pair trade. Here's our biotechnologies price action based in percentages, and the red one is the underlying, or XL. What's that one? XLP staples. Now the dotted pink line, that is actually the pair working. That's the ratio symbol, and the larger dotted, which is basically I think it's a 21 moving average. So the price action you're interested in is the pink line. So you want that to rise in a situation where you go long biotechnology and short staples. We're going to go back to our Google and Apple one, so we can just find that for a sec. There we are. Here we are. Let's see, for example, here. This is the short Apple, long Google. And as you can see, this pair has gone from negative 70% movement to 30%. So quite frankly, that's 100%. You go from negative 70 to 30%. It's 100% gain on your pair trade. So the hedge funds in the last 6 months to a year have made a right nice little profit playing that game. Well, obviously, if you went long Google, you would have got between there and there, you would have gained 30%. And if you went short Apple from there to sort of here, 90% down, you would have made 60%. The money was in the pair trade. We actually made a massive 100%. So pair trades can expand your profitability. Now, just for example, here's one. Staples. Consumer staples, a strong trend over the past couple of years, but they also pay dividends. And we all know why interest rates are so low with the Fed putting, keeping interest rates down. TBT is the offset to higher interest rates. Therefore, it goes down when the interest rates are low, and it goes up when interest rates are rising. Because the TBT takes up on the US bonds between 7 and 10 year, I think, or was it 7 and 20 year? Anyway, for example, here we have, if you brought the XLP, the black line, you would have made, from this point here, you made nice 40%. And if you went short XLP here, you probably would have made about 30%. If you took the pair from here, you would have made a nice 80%. Is that right? 70 to 80%. So the pairs can expand your profitability by taking on the relationship. And as you can see here, it's a nice solid trend with hardly a dip. Oh, there we go. Okay, so let's have a look at the Hugh Henry one. Hugh Henry is a well-known Scottish fund manager. He's quite vocal. He's on television a lot. He went long gold and short GDX. So he went around about here somewhere. He went long gold, which is the black line. That didn't work out for him because obviously, it did work out, but gold actually went down, as you know. But GDX actually fell faster than gold. As you can see here, the pair, the dotted pink line, gained from 35% all the way up to 50%. So that's a good 15% gain. So he made money all along that pair action, while both markets are falling out of bed. Right, okay, there's another one, Google, Apple, staples. Oh, here we've got the Russell small cap versus OEF, which is the S&P 100 index. So what they're basically saying is people buy the small cap because it's higher risk, because it goes up, and people are more conservative, they buy the S&P 100, and it's just not as aggressive as the Russell. So here, for example, is a very, very aggressive time to own the pair. Started to come off there, so you could have targeted more buying here of the pair. So therefore, there's a lot of relationships in the market that work. They're like offset, for example, interest rates up, interest rates down, high dividend, low dividend, higher risk stocks, low risk stocks, one country versus another. Just exactly the same way you look at currency. When you look at a currency, you might be looking at the Australian country, Australian dollar for Australia, and looking at the US dollar for USA. So the pair of the AUD to US dollar is a foreign exchange pair. It's exactly the same logic with stock pairs. You're comparing one story with the other, even though you may not be too sure about the individual stories, but you're very confident of the relationship that one's going to go left and the other one's going to go right. Pair trading is very good for expanding your profitability on a story like that. The only problem with pair trading, I was just as managing them. You might know 3, 4, 5, 30, 40 pairs you want to keep a track of. This is where our alpha functionality, these tables here can list 30, 40 to 30 pairs. Obviously, you can use 3 or 4 tables. That's 90 pairs to easily track and monitor them when the market gets volatile, attack positions. Thank you very much for watching.